As we've been reporting, the president is defending his decision to impose tariffs on Mexico. The U.S. will slap a 5% levy on imports from the country beginning June 10th. Mr. Trump says it's part of an effort to halt the flow of people crossing the border. And he's threatening escalation. The levy has the potential to reach 25%. It will increase each month unless action is taken, though it's not clear what that action would look like. On Sunday, the president called Mexico a, quote, abuser of the United States. He added if the country does not make any changes, American companies and jobs that were, quote, foolishly allowed to move south of the border will be brought back into the United States. Ann Berry joins me now. She's a financial analyst and partner at Cornell Capital. Ann, thanks so much for being here.
Pleasure.
So this 5% tariff on Mexican imports is not due to go into effect for another week, but we're already seeing an effect on the markets, right?
Well, absolutely. I think it's twofold, the effect on the market. I think this is in a vacuum, which at 5% is basically a $17 billion tax on the consumer who's already having to absorb the cost of the Chinese trade war. But I think the other part of this, too, is it's just added even more uncertainty when it comes to trying to understand what President Trump's economic policy is. You know, where does it stop and who's coming next?
And, you know, the president says the levy could go up to 25% by the fall. Republican Senator John Kennedy told Face the Nation Sunday that that would, quote, tank the American economy. Give us some perspective here, some context. Which industries are we talking about that would be hardest hit?
Well, if you look at the overall pie of imports from Mexico, we're talking about a $345 billion set of products and imports coming into the U.S. About 20% of that is the auto industry. Almost no auto manufacturing in the U.S. has no exposure to Mexico. So when we think about the sector that's going to be hardest hit, then that will be one of them. Another one is agriculture. If we see retaliation and we see decline in Mexican imports of U.S. goods. So as we think about this, there's the macroeconomic side. But you're also looking at the Trump base really getting a hit as a result of this policy.
Yeah, and can you elaborate on that? I mean, I think when people hear about these sort of trade wars, they don't necessarily understand exactly how it is that these policies could then have the potential to affect consumers. Can you explain that?
Well, effectively, it means that when you have an import coming in from Mexico in this instance, it means that there is a tax levied at the border and someone's got to pay for it. So while that tax may go into federal pockets, ultimately it's the consumer who is likely to have to pay a higher price because that Mexican exporter to the US will need to see their own headline price be maintained. So when we think about this, you know, again, if we look at what the China impact has been, that's about $800 on average for household. This is incremental to that. So really it's the consumer pocket that's going to get hurt.
So you have, meantime, this pending North American Free Trade Agreement in the works, and this is supposed to be a replacement for NAFTA. But how is it that this kind of rhetoric now and this trade threat, or this tariff threat rather, is perhaps going to be affecting those negotiations? Well,
the heat has definitely come up when you start calling one of your primary trading and national security partners, by the way, an abuser of the United States. That's definitely gone to a different level.
Right.
I think it has definitely put a wrinkle into seeing the agreement formerly known as NAFTA be ratified. And I think what's going to be interesting now is to see what happens. Will Mexico come back and try to defuse the situation? I think there's been some body language they might, but also what's Canada going to do to try to understand how that entire agreement pulls together.
And all of this is happening, of course, as there is a trade war with China that the U.S. is engaged in under the Trump administration. When you look realistically at the broader economic picture, can the U.S. economy actually sustain all of these tariff fights?
Well, it's interesting when you actually look at the growth that you've seen despite the Chinese tariff programs. GDP has still managed to sort of outperform in the first quarter of this year. Unemployment has still been at 50-year lows. But I think when you peel this back and start looking at this sector by sector, to your earlier question, you can see some fragility. So, for example, manufacturing has been slowing down, farm incomes are down, and cash levels that are the lowest they've been since 2009. So while at a sort of top level things seem to be humming along, I think we can anticipate there being some repercussions if this continues.
So this week, the White House officially raised tariffs on China to 25% for all products arriving to the U.S. by sea. Beijing is retaliating with higher levies on about $60 billion worth of American imports. At one point, it seemed that things were looking promising, that perhaps there was a deal that they were able to reach, and now it seems completely far out of reach. What happened? What would need to happen for the United States and China to come together on this?
Well, it's interesting. China came out with a white paper today very clearly pointing the finger at the US and saying what they will need to be able to come to an agreement is trust, in a sense that the US will do as it says it will. And I think what you've seen with this sort of surprise Mexico tariff is a little bit of discomfort coming in. Will the president do what he says he's going to do if these negotiations continue? I think at least where the Chinese situation is less complicated than the Mexican one is there's a specific outcome. The Trump administration wants changes in intellectual property transfer rules. They want to see a specific reduction in the trade deficit. So I think if agreements can reach the point where those specific goals are met, we can see resolution. I think Mexico is more difficult because there's no specific outcome.
Right, it's a bit more amorphous.
Exactly.
Yeah, so what is the target and how do you measure that?
Right.
So what do you think then is the best path to move forward when it comes to China and these trade negotiations? Because, even those critics of the Trump administration argue that, in fact, there is firm footing that the administration has in its actual critique of unfair trade practices by the Chinese.
I know there's a fascinating TV segment recently where you had sort of Tom Friedman, the great liberal writer, and Steve Bannon violently agreeing with each other.
Right. What does that tell you?
On this point. So I think you do have a sort of tacit bipartisan support for a strong position on China. I think that being said, we are going into election season. 2020 is looming, and I think what the Trump administration will not want to do is go after this at all costs and threaten his ability to be re-elected. So I think that's one piece. I think the second piece of this is there needs to be a very specific policy response that talks about investment in research and development, investment in education, that helps to counter things like, perhaps falling behind on the intellectual property or innovation front.
All right, so many implications for all these trade wars. Ann Berry, thanks very much.
Thank you.